Australia looks like one of the world's strongest economies. High incomes, low unemployment, and a reputation for stability have made it a global success story. But beneath that success is one risky reality. Australia's economy depends on one dangerous bet, and that bet is housing. For decades, rising home prices have done more than make homeowners richer. They have fueled consumer spending, supported bank profits, boosted government revenue, and driven economic growth. In many ways, property has become the engine of Australia's economy. But what happens if that engine slows down? Australian households hold some of the highest levels of debt in the world, and most of that debt is linked to mortgages. At the same time, banks have a large share of their loans tied to residential property. This means millions of families, major banks, and even the government all benefit when house prices keep rising. As home values increase, people feel wealthier. They spend more money, renovate their homes, buy new cars, and invest in businesses. This creates jobs and keeps the economy moving. But the opposite is also true. If property prices fall, confidence can disappear quickly. Families often reduce spending, businesses lose customers, banks become more cautious, and economic growth begins to slow. A weaker housing market can affect almost every part of the economy. Australia has managed to avoid a major nationwide housing crash for decades, thanks to strong immigration, limited housing supply in many cities, and strict banking regulations. But conditions are changing. Higher interest rates have increased mortgage repayments, the cost of living continues to rise, and housing affordability has reached record levels. Many young Australians now find it harder than ever to buy their first home. Even small changes in the property market now receive national attention because so much depends on it. This doesn't mean a housing crash is guaranteed. Australia's banking system remains well regulated, unemployment is relatively low, and policymakers still have tools to support the economy during difficult times. However, relying so heavily on one asset creates long-term risks. If too much wealth, borrowing, and economic growth depend on rising property prices, the country becomes more vulnerable whenever that market weakens. The biggest challenge for Australia's future is finding new engines of growth. Industries like technology, renewable energy, advanced manufacturing, education, and innovation could help reduce the economy's dependence on housing. Property will always play an important role, but no economy can rely on a single sector forever. Australia's greatest strength has also become its biggest risk. The question isn't whether housing matters. It clearly does. The real question is whether one market should carry the weight of an entire nation's future. And the answer to that question could shape Australia's economy for decades to come.